So good morning everyone. Let us start with the concepts and conventions. So I'll explain you each concept in one video because it's a detailed concept when we are discussing in such a way that it's very easy to understand as well as learn the same thing. Okay, so let's begin with this. Now we will see over here going concern concept. What is the meaning of going concern? Going means you are continuing your task. Going means you are going on. Going on means continuing your task. Concern is this business is always going on. What does it mean? That the business will continue to carry on its activities, right? For an indefinite period of time. And this way you can learn the example because going on concern, that is the concern, the business enterprise which is being continued on, right? So the concept says a business will continue to carry its activities. Or when we say business will go on, what does it mean? It means that business will continue to carry out its activities for indefinite period of time. That means that there is no time limit over here. For indefinite period of time, you can continue your business. Now, it will not be liquidated. Whenever anybody starts a business, does it start it for the purpose of liquidation or for survival and success? For survival and success, right? So that means it will not be liquidated or dissolved in the nearby future. That means in the future, we are not abandoning the operations. We are not shutting down the business. Okay. Now, because see, when you start a business, we always start a business with the aim of earning profits, aim of earning survival and growth in the market. But you don't have any intention also to curtail the operations. Curtail means shut down, cut down the operations significantly. That means I have no intention also that I want to shut down my business, and also neither need to shut down the business. Okay, so this is very important concept. And this says, for example, an oil and gas firm operating in Nigeria is stopped by a Nigerian court from carrying out its operations in Nigeria. So this is not a going concern in Nigeria. ये जो concern है, जो business enterprise, it is called as going concern. Okay, because it has to shut down. So if any business is shut down in the middle, while, then you will not say it is a going concern concept. It is a going concern only if it is carrying on its activities continuously on a infinite period of time. Now, one most important concept which covers in this is, see, these questions are very important for all those who want to cover for the net exam or for the, or for this BBA or MBA, because the thing is, because these concepts have significantly included all the, information which has to be presented in one particular concept. I have put all the information in one concept, so I'm sharing one video with you all, okay, for one concept. And it's very important assumption of accounting. It provides a basis for showing the value of assets. Now see, how will you calculate the value in the balance sheet? That what value of an asset will you show in the balance sheet? For example, you purchase a furniture for rupees 30,000, right? But you purchase it on credit. So the person will give you on credit only if it is assured that your business is not shut down, right? Your business is not be shut down. Business will not be shut down, and you will continue it in the future. That is why anybody will give you loan or anybody will give you a credits, right? So what does it mean is, so it is very important concept. The concept which shows the values of assets, which shows the basis for valuing the assets in the balance sheet, that is going concern concept. Because of this particular shield only, because of its nature of going concern, that is why the people differentiate between current liabilities and long liabilities, right? Current assets and long term assets. Okay, there's a distinction between this current assets and fixed liabilities. What does it mean? Current liabilities and long term liabilities, short term liabilities and long term liabilities. Short term is for 1 year, and for long term it will be more than 1 year. Okay, so liabilities and assets both are differentiated on the basis of these concepts only. Okay, because when we say business is a going concern, that means you purchase any asset for the business for a period of, let's say, 15 years or say 20 years or 30 years. Okay, so this particular period of time is ensuring that the business will not be shutting down and it will continue its operations. And so there's a difference between current assets and long-term assets, long-term liabilities and short-term liabilities. Because of this time period only, this is the time span. Because of this time span only, we are calculating the difference between short-term and long-term. If there is no thing as time, then we should not have made distinction between any of these, right? Now, capital expenditure, revenue expenditure. Capital expenditure is expenditure which is done for a period of more than 1 year, which is giving you benefit for more than 1 year. And revenue expenditure is giving you benefit for only 1 year. Like, for example, stationery or inventory. This is revenue expenditure. And capital expenditure is buying, like for example spending on advertisement for the product for the firm. एडवर्टीजमेंट के लिए आपने स्पेंड किया, जो आपको बेनिफिट मिलेगा ना इससे, ठीक है. सो इस तरीके से कैपिटल एक्सपेंडिचर हो गया, राइट. ओके. Now, facilitate preparation of financial statements. Obviously, because of this particular thing, we are calculating the value of assets in the balance sheet. How? Because when the assets are recorded at the cost price. Okay. One more important thing: we are recording the assets at the cost price. This is very important thing to understand. We are recording the assets at the cost price, not the market price. That means we are recording what is the value of the asset of an asset after 10 years. Let's suppose suppose I purchase this mobile phone for 50,000. Okay, and after a period of 10 years, the value will be declined to, let's say, 10,000. So I am showing the book value only. I am showing the book value which is depreciated over a period of 5 years, okay, or 10 years. So this is called as the recording the asset as a cost price, not the market price. Market price will be what is the current value of the asset in the market of that particular product. Okay, so that is the market price. So cost value is the value which is recorded at the cost price. Fine, easy. Now let us understand an example of it. For example, the company purchases plant and machinery worth rupees 3 lakhs in 2016. Okay, उसकी asset life थी, this value of an asset is 20 years. Value of an asset is 20 years. So that means for 20 years you will use this machine, and you have no intention to shut down your business, neither to sell the asset. Now it will generate revenues for the firm. Obviously, you will earn money, and you're not buying it for resale. You're not buying the machinery for reselling it. Okay, you are purchasing it for generating revenues for your business and for earning profits for your business, right? This will be recorded in the balance sheet on the acquisition cost. Acquisition cost is the cost price. Okay, after deducting the value of an asset of depreciation. Depreciation को minus करते करते जो आपकी value बच जाती है end में, so that is known as your एक्विजिशन कॉस्ट, जो आपकी लास्ट में जो कॉस्ट हो जाती है, बुक वैल्यू जो रहती है, ठीक है. मार्केट प्राइस नहीं लिखना है इसमें. एवरी ईयर सम पार्ट ऑफ द एसेट विल बी कंज्यूम्ड फॉर यूटिलाइज्ड टू जनरेट द इनकम फॉर द बिजनेस. नाउ सी, since this expenditure which has been done by you is rupees 1 lakh on advertisement. Okay, now this 1 lakh advertisement will be shown off or written off in the particular first year only? No, it will be spread over a period of number of years. Let's say suppose it will provide you benefit for 10 years. So this 1 lakh of advertisement cost will be spread over a period of 10 years. Okay, this is because of this concept only. So every year some amount, say 20,000, is charged as depreciation. So only a part of the value is asset is shown in the expense in the balance sheet, and remaining will be shown in the as an asset in the balance sheet. I think clear. Next is, according to this principle, amount spent on any item which will be used in the business for many years, we will only charge from the revenues of a period only that amount of asset which has been used. जितना asset हमने use कर लिया है, suppose आपका आपने कैंडी मैन्युफैक्चरिंग मशीन खरीदी, उसका आपने आपकी 20 lakhs की मशीन थी, फर्स्ट ईयर में आपको 1 lakh का डेप्रिसिएशन था, तो सेकंड ईयर में जो आप शो करेंगे तो 19 lakhs will be the value of the asset, थर्ड ईयर में 18 lakhs is the value of the asset, स्ट्रेट लाइन डेप्रिसिएशन के मेथड के अकॉर्डिंग आई एम टेलिंग यू. So we will only spend the amount of 1 lakh in the depreciation expense in the trading and profit and loss account, and you will not be showing anything in the except the book value in the asset side. So in the asset side, it will show 19 lakhs and depreciation in the trading and profit and loss account, that is 2, depreciation 1 lakh. So we are not deducting the whole value of 20 lakhs in the 1 year only, because it is a capital expenditure. That means it will provide you benefit for more than 1 year. Okay, so this is the crux of the answer. And you can see over here, assets, we are showing assets, we are showing the price value, and then we are separating the depreciation from it, and we are showing this value in the balance sheet. So that is why we say this particular method, this particular concept helps you in showing the value of the assets to be shown in the balance sheet. So this way you can show the depreciation expense, you can show this expense, and this is the depreciation expense shown in the balance sheet. So this is the completion of the concept of general going concern concept. Okay, thank you everyone, thank you so much.